So these are the corporate governance traits that we see. Different categories have different traits. Government-owned companies. This is the public sector companies. As we saw, apathy, as many of you would have already known, the circle of apathy that we talked about here predominantly belongs to, I would say, government-owned companies. These companies don't care or do not so much act in the interest of shareholders, though the biggest shareholder, ironically, happens to be the government itself. But because these companies are not so investor friendly and focused towards creating shareholder wealth, it comes at the cost of wealth of the government itself. Okay, and that's where if you see the PE multiples, the ROEs, etc., of these companies, the public sector companies are woeful, right? In fact, it's sort of almost a disservice to the Indian taxpayer when the government disinvests or comes out with OFFs, offer for sale, of even 2%, 5% of companies at PE multiples, which are, I would say, very, very low. And whereas if they really work towards enhancing just the multiples or the way these companies are governed, the valuations of these companies would be much, much higher, and the governments could then sell off part of the shares to fund its own coffers and benefit the taxpayers, right? Promoter-owned companies, these are, of course, promoter-started or promoter-owned companies, Tata's, Birla's, Reliance, Infosys of the world, of course, now a lot of other pharma, Sun Pharma to Dr. Reddy's to everything, promoter-owned companies. These companies also have their own set of challenges, right? At one end, you have related party transactions. Some of these companies have promoters having their own private limited companies or taking cash out from the company in various means. Compensation is an issue. If you look at year after year, we have commented on compensation of companies like Apollo Tires, Sun TV, Apollo Hospitals, etc., where the promoters take compensation which is completely out of the ballpark of any other peer in those sectors, or even the professionals that could take. So the promoters take compensation which are completely out of the ballpark, right? And India listed subsidiaries of multinational, we have this notion that these India listed subsidiaries of multinationals or the MNCs listed on Indian stock exchanges are, we treat them as gods. But unfortunately, this is not the case across all the MNCs listed in India. In fact, to the extent that even the large companies once in a while screw the minority shareholders. And I'll take the names of Siemens, for example, when they, I would say, merged some 100% subsidiary into the India listed company. They did it at valuations which were not, I would say, in line with the listed company's valuation. So they did it. They obviously overvalued their 100% shares, and then they got more percentage. On the contrary, when they sold off their medical healthcare division to and moved it to a 100% sub, they did it at valuations which were much, much lower. So these are pushbacks from companies as this one. Then there is the issue. I mean, we had, though we have not commented or we have not had this one, a couple of years ago, Novartis. Novartis is a listed Indian company, but Novartis, if you see, is one of the world's largest, or probably the largest pharma company, right? But yet the India company is completely in doldrums. The India listed company is completely in doldrums. What is happening? Novartis has another 100% subsidiary in India, probably sharing the same resources. In fact, the MD of the India listed company is also the MD of the other listed company. And as we saw before, the MD or executive director is supposed to devote 100% of time to one company. So that meant, what that meant is shareholders of this listed company are sort of subsidizing the compensation for the unlisted company. And for all we know, we don't know how much of resources is going there. to the unlisted company. All the new launches are happening in the unlisted company. New pharma drug launches are happening in the unlisted company, etc. So that's where you will see that a Novartis listed company in India is not held in high regard. There is no institutional shareholding and of merit. I think that's a company that is screwed from this perspective. So India listed subsidiary of MNCs has this issue. We'll quickly look into another case of how this happened. Banks, of course, have multiple, again, there are private, public sector banks, private sector banks. Banks are also governed by the RBI, right? I mean, so to that extent, there is RBI, which also puts its own foot. The Banking Regulation Act, in fact, just earlier this week, we had a discussion in the FICCI with the Department of Financial Services Secretary that there should be unification of regulation between RBI and SEBI, because RBI puts its foot down on appointment of directors, on appointment of tenure of directors, etc. So that is something that is slightly this one.